I'm looking at all this paraphernalia with technology, and I'm a guy that, until about 6 months ago, I didn't realize there was a camera on my cell phone. So you can imagine how backward I am with all this. This reminds me, when I first got the job at St. Louis University, the school was on probation for something my predecessor had done. We were not allowed to be in any tournament or NCAA tournament event. Attendance was at an all-time low, averaging about 1,200 people a game. People used to ask me, what time's the game start? I'd say, what time can you get there? I mean, it was that bad, really. I had a limited number of scholarships, et cetera. So I get the job at St. Louis University, coming from the University of Missouri, and I basically told myself that I would not turn down any speaking engagement, no matter how small or unimportant it seemed to be. I had to get the word out that St. Louis University was alive and well. So I'm sitting in my office the first day, and I get a phone call about a speaking engagement. It was from a Catholic grade school nun. And she said, Rich, I want you to come and talk to my 8th grade class. And I thought, well, you want me to talk about basketball or what? And she said, no, I want you to talk about life and growing up. Well, I think I'm a big-time college basketball coach, but I'm not even talking about basketball or anything. So anyway, I decided it's my first speaking assignment, and I'm not going to screw it up. I'm going to be very calm and debonair, and I'm going to prepare my speech with no notes so that I really look good and smart. So I prepare my speech, and I get to the grade school, and I'm up on the stage, and the nun and all the 8th graders are down here. And I'm trying to make the point that as one goes from one stage of life to the next, it's more fun, it's adventuresome, it's exciting. So I said, the joys of childhood are nothing compared to the fun and thrill of being a teenager. Then I said, the fun and thrill of being a teenager is nothing compared to the fun and excitement of adultery. Well, that's when I decided to always have notes. Never try to speak extemporaneously without notes. So we have a PowerPoint that I hope I don't mess up. Brian set it up. I could never set it up. So anyway, we're going to talk about Social Security. Hopefully we can keep this to about 40 minutes. I would like to maybe save the questions till the end. Steve Miller, my associate up here, is also very knowledgeable about Social Security. And if you have any questions pertinent to your own situation or maybe someone else's, feel free to come up afterwards and ask us. I just want you to know that, this is a little disclaimer. I do not sell anything. I'm not licensed to sell anything. My job is simply education. I work for a company called Educational Strategies, Infinite Educational Strategies. There's a handout in your packet. It's a 501c3 nonprofit organization. We try to educate people about various facets of financial life. We hope to get grants to do this. We also have sponsorship from various organizations. Rockwood Bank is one of them. So again, I'm not going to try to sell you anything. I'm not going to try to push any product. I'm not licensed to do that. What I'm going to tell you about Social Security, you have to make the decision about when to take it, how long to wait, etc. I suggest you talk to your financial advisor or your banker or whoever you have confidence in to make those decisions. If you look at this first slide, and some of the slides are also in your handout. This one is in there. Key things that I will be saying during the presentation, and I will be using acronyms. And I kind of in the habit of doing it. So FRA means full retirement age. And I'll be referring to FRA. It's the age at which your benefits are calculated, and at that age, you get unreduced benefits. And I'll talk about when that is in a minute. PIA means primary insurance amount. It is really what you get at full retirement age. It's a fancy way of saying it. It's the amount you get at your full retirement age. COLA refers to cost of living adjustment. I think this past year, those of us on Social Security got a 1.7% increase. A few years back, it was 5.8. Then there were a couple of years where it was 0. Deemed filing, this is an important concept. Deemed filing says this: if you file for your benefit before your full retirement age, you have to take, by law, the highest benefit available to you. Now, you might be thinking, why would I not want to take the highest benefit? I'll explain why you might not later on. But if you're before your full retirement age, you don't have that choice. After your full retirement age, you could take a lower benefit in order to let a higher benefit grow. And I'll explain that. Deemed filing is what that is called. DRCs is an acronym for delayed retirement credits. If you take your Social Security benefit after your full retirement age, you are guaranteed for every year you wait an 8% increase plus any COLA. So if there's a 2% COLA and your full retirement age is 66 and you haven't started yet, and you wait till 67, and there's a 2% COLA that year, you get 10% more. If you don't take it till you're 68, you get 8 plus 8, which is 16% more. We'll talk about that later. That's DRCs, delayed retirement credits. Just some things to remember very quickly. Social Security adjusts for inflation. I was with a client today and showed them that if I had to pick a time when they're going to die, I said, you're going to use the Social Security actuarial tables. A man is said to be living now on average to about 84, 85. A woman a little longer, 86, 87. So I said, let's figure your Social Security benefit and give a 1.5% COLA. All right? These particular people were shocked when at the end, assuming they die at those ages, they would have collected a little over $1 million in Social Security. Those COLAs are important. They help us keep up with the cost of living. It's backed by the promise of the government. Social Security is not dependent on the volatile stock market. If you're single, your benefits end when you do. There's no passing on your Social Security to your kids. In a way, singles are penalized versus married couples because married couples can pass on their Social Security benefit to their spouse, but singles can't if they're not married. All right, here's the full retirement age, and I'd like you to write this in there on your sheet. And there's some stuff on your handouts that I'm not going to cover. If you were born between 43 and 54, your full retirement age is 66. If you were born in 55, it's 66 plus 2 months. This is very important to know your full retirement age. If you were born in 56, it's 66 plus 4 months. 57, 66 plus 6. You see where I'm going with this. If you're born in 1960 or after, it's 67. Now, if you heard or read about Chris Christie, the Republican candidate for president, he's come out with a proposal on Social Security. He wants to raise this to 69. All right? And he wants to raise the starting point for Social Security. You can start as early as 62 to 64. I don't think seniors or those approaching Social Security are going to be happy with that. But that's not here nor there. That's a political situation. So note when your full retirement age is. Why is the full retirement age so magical? It is magical. Number one, it's how Social Security determines your benefits. They start with the full retirement age benefit. If you take it before, they reduce it. If you take it after, they raise it 8% plus COLAs every year. So that becomes important. Secondly, for every year you take your, well, I said that, you can continue to work at full retirement age or after and make as much money as you can, and your Social Security will not be reduced. If you work before your full retirement age, your Social Security could be reduced if you're taking it by an earnings test. We'll cover that in a minute. Also, at full retirement age or after, you have special strategies you can use that you can't use before your full retirement age, like file and suspend, like restricted application. I'll explain those later. But that's why full retirement age is so magical. There's stuff you can do then that you can't do before full retirement age. Now, we talked about taking your benefit at full retirement age. You get 100% of your benefit at full retirement age. If you take it And I'm assuming now, ladies and gentlemen, I can't talk about every full retirement age, so I'm using the one that I kind of thought most of us in this room would be under, born between 1943 and 1954. Okay, so 66 is what I'm using, but the same rules apply if you're born in 55, 57, etc. If you were born between 43 and 54, 66 is your full retirement age. If you take your benefit before that, it gets reduced. If you take it 1 year before, you get 93.3% of your full retirement age benefit. If you take it 4 years before, you get cut 25%. You get 75%. By the same token, if you take your benefit 1 year after your full retirement age, you get an 8% increase. 2 years, 16%. 4 years, 32%. Just keep remembering, I take any benefit before my full retirement age, whether it's a widow benefit, a worker's benefit, a spousal benefit, any kind of benefit before full retirement age, it's going to get reduced. Okay, just keep that principle in mind. How are Social Security benefits calculated? First of all, there's an annual cap on wages. If you make more than $118,500, everything over that you don't pay Social Security taxes on. One of the proposals to keep Social Security solvent is to raise that cap. I mean, the argument is somebody making $200,000, you mean between $118,000 and $200,000, they don't pay Social Security taxes? That's right, they don't. Okay? Social Security takes your 35 highest years of earnings. If you don't have 35, they give you a 0. That hurts. So it behooves people, if they can, if they're physically, mentally, emotionally able to continue to work, to get 35 years in. They then add the 35 together. They index them to inflation. Now what that means is, back in 1980, if you earned $5,000, on the computer that Social Security uses, they may show that $5,000 is worth $25,000. They index them to inflation, but you don't see that on your Social Security statement. You just see on your statement what you made, okay? But they take the 35 highest years, index them to inflation, add them up, divide by 420, and they come up with something they call your AIM, Average Index Monthly Earnings. That's a pretty good number, but you don't get that. But it is a good number. It might be 3,000, might be 2,000, after they divide all that by 420. Then what they do with that AIM, that number, is they apply a formula to get what they call your PIA, your primary insurance amount, which is what you get at, who can answer that? Full retirement age. Good job, class. Okay? Now, again, I can go into the formula. Steve can go into the formula afterwards if you're really interested. But trust us, this is how it's calculated. So, if you don't have 35 and you don't want those zeros, you got to work. Because no matter what you earn, like if you're working now, like I'm working now, I'm past my full retirement age. I am earning more this year than one of my previous 35, which was low. So what Social Security does, every end of the year, they recalculate my benefit. They knock out one of those earlier zeros or low numbers and put in what I'm making now. And they'll send me a letter saying, we've recalculated, you get an extra $5 a month. It's not going to be $100 a month because the formula they use is heavily weighted to lower wage earners. Lower wage earners get a better percentage of their final salary than higher wage earners. And lower wage earners in Social Security's mind is probably anybody making 25 or below. And there's a lot of those people around. Can I still work if I'm taking my benefit? Can I still work? There's a limit to what you can earn if you're before your full retirement age. If you're at your full retirement age, which I am, I don't worry about seeing my Social Security reduced because I'm past my full retirement age. If you exceed the limit, your Social Security will be reduced. The limit for 2015 is $15,720. $15,720. And for every $2 you earn over that, you're reduced $1. I'm going to give you some examples. There is a big exception. The year you turn full retirement age, and all of you be thinking, what is my full retirement age? Remember that. The year you turn full retirement age. So let's say you turn full retirement age in this year, 2015. That year, that earnings limit goes from 15,720 to 41,480. They give you a break in the year you turn full retirement age. So that limit jumps, it almost triples. And instead of reducing for every $2, you reduce one. For every $3, you reduce one. So it is very possible, and I counsel some people to do this, if your birthday is in March of 2015 and you're earning $65,000, $70,000, but between January and March, your birthday, you're not earning 41 of that, you can start your benefit in January. Because that earnings test isn't going to affect you. You kind of get what I'm saying? So that's important. Here's an example. You've elected to begin receiving your Social Security benefits before your full retirement age, and your benefit is $1,000 a month, $12,000 a year. You're earning an additional $21,23 a month, or you're making $25,720. So subtract $25,720 from the limit, $15,720, and you're $10,000 over the limit. But you divide that $10,000 by 2. So you're $5,000 over the limit. A lot of people think, well, I won't start my Social Security then. But you don't lose all of it. Social Security says you're $5,000 over. We're going to send you $1,000 a month. So for January, February, March, April, May, 5 months, we won't send you a check. That's the $5,000 that you're over. But from June to December, we'll send you $1,000. So that person could be working, making $25,720 at his job, could be collecting Social Security at $1,000 a month for 7 months. There's an extra $7,000 coming in. So the earnings test can be manipulated depending on your salary. And one of the jobs Steve and I have is we advise people on how to do this. What happens if I elect to take my benefits? Well, I just said that. They withhold the checks. What happens if I take my benefits at or after? No earnings limit. You can earn whatever you want. Your benefits will not be reduced, and this applies to any type of benefit. Now, what is deemed filing? If you file before your full retirement age, Social Security assumes you are filing for the highest benefit you can get, whether that be a spousal benefit or a worker's benefit. A spousal benefit means it's someone off, I'm claiming something off my wife or my husband. Social Security says you must take the highest benefit. But at full retirement age, deemed filing goes away. It goes away. Again, you may be thinking, why would I take a lesser benefit when I could get a higher benefit? All right? A spousal benefit might be the reason. A spousal benefit is called a secondary or auxiliary benefit. It is one that you claim off your other spouse's record. The reason this was put in, folks, remember, Social Security started back in 1935. Most women back then did not work. They were stay-at-home moms raising the kids, okay? So what Franklin Roosevelt and the Social Security Administration came up with is a spousal benefit to help out the non-working wives, which were aplenty back then. Now society has changed a little bit, a lot, really. A person can't claim a spousal benefit until the other spouse has filed for a benefit. So if my wife wanted to claim a spousal benefit off my record, until I filed, she couldn't do it. All right? You with me on that? There's an exception for divorcees, but I'll get to that later. The spousal benefit is based on what the other spouse is getting at his full retirement age. We're back to that term, full retirement age. It's based on that. not what the other spouse is actually receiving. It's what he would have received at his full retirement age. All right? Must have filed again. I'm going to give you some examples. So the maximum spousal benefit is 50% of what the other spouse is getting at his full retirement age, even though he may be getting less than because he's not at full retirement age, or he may be getting more because he's 70, but you only get 50% of what he was getting or should have gotten at full retirement age. I'm going to give you some examples. If a spousal benefit is taken before full retirement age, guess what happens to it? It gets reduced. And you must take the greatest benefit you're entitled to if you're filing before full retirement age. That's called deemed filing. All right, look at these numbers. A worker, 66 is full retirement age for a worker. They get 100%. They take it early, 93. They take it at 62, they get 75. Look at the spouse. If the spouse takes a spousal benefit at her full retirement age, and I'm going to say the spouse is now the woman and the man is the worker here in this example, they get 50%. With me? If they take it early, they get reduced, 45, 41, 37. Look what happens to the spousal benefit if you wait till 1 year past your full retirement age. What do you notice? It is still 50%. What if you wait till 70 to take it? It's still 50% of this number. So for spousal benefits, you might as well, if you're going to claim a spousal benefit, take it at your full retirement age, because it's not going to get any more. It can't grow. I told you something about DRCs, delayed credits, 8% a year. The only benefit that can grow that 8% is your own worker's benefit. A spousal benefit doesn't. Therefore, I'm going to give you some examples, a little quiz. Bill and Mary are the same age. Their full retirement age is 66. Bill's PIA, that means what he gets at full retirement age, is $2,000. Mary's is $800. Bill filed for his benefits. He files. How much does he get? No trick question here. What does he get if he files? $2,000. Good. Not a trick question. This might be, though. Mary files for her spousal benefit when she's 66. What does she get? $1,000. Right. She gets 50% of that, $1,000. What if Mary waits till 68 to file for that spousal? Good. You got it. That's it. Okay? Now, another example. Bill and Mary are exactly the same age. Same situation. Mary is 63 and wants to file for a spousal, but Bill is not yet filed. Can't do it. Can't file for a spousal till the other guy is filed. Can't do that. Now, there is going to, well, I think this will be the exception. Bill and Mary are exactly the same age. Same example. Mary files for her individual workers' benefit at $800. Bill files for what is called a restricted application, a spousal benefit. Now, you might think Bill's stupid for doing this. What would he get? Yeah, we said it? You're right. How much? $400. He gets half of hers. Now you think, well, Bill's stupid. He could get $2,000. He's at his full retirement age. He's got a choice. Deemed filing, which means you have to take the higher, does not apply at or after full retirement age. So his benefit, if he files for a spousal, will be $400. Why might he do this? Because, what? Yeah, at 70, he's going to say, I don't want my spousal. I want my own worker's benefit. How much will it have grown? 8% after 66. For 4 years, a minimum of 32%, maybe more. So that $2,000 might become $2,700, $2,800. And he says, I don't need that $2,800 at age 66. $400 will do. So there's a case where you file for a lesser benefit in order to get a higher benefit later. Deemed filing, which says you must take the highest benefit, applies before full retirement age, but not afterwards. You could take a lesser benefit. And that becomes a strategy that might be beneficial. All right, now, what is file and suspend? Well, we'll get to that in a minute. Let me skip that one. All right, let's go to it. You could have a strategy called file and suspend. I could file for my benefit at full retirement age. I could file for it, then I could quickly say, I want to stop it. I want to suspend it. Why might I do that? What happens when I file? What about my spouse? She can file. She can't file until I file. So I file. This is a loophole in the law. Then I say I suspend, which allows my wife to file for a spousal. And why might I suspend? Rich, you answered it before. Because what?
You get more money later on.
Later on, you can get more money. So you suspend your own benefit, which allows your wife to claim a benefit. John waits until 66, files and then suspends. John's benefit would have been $2,000. Mary's worker's benefit is $500. Mary files for a spousal. What does she get? John files for his benefit at age 70 and gets 32% more than the $2,000 plus COLAs, which means he might get $28,000, $29,000, $3,000. This is called file and suspend. It's a little-known strategy. It is such a good strategy that our Congress is thinking of getting rid of it. That's what they're thinking. And that tells you it must be pretty good. Congress is saying only the wealthier people and the smarter people are taking advantage of this. So why help them? Let's help the little guy more. That's what they're saying. After filing and suspending at age 66, John decides at age 68, let's suppose at age 68 he gets cancer. You can unsuspend at any time and get a lump sum payment of the years you didn't take it. So John, because he's got cancer, he thinks, I don't have much longer to live. Why should I suspend? I might as well take this benefit. He can go back, and if we're getting $2,000 a month, he's suspended for 2 years. He can get a lump sum check for $48,000. Now, his benefit goes back to what it would have been at $2,000 at 66. So he's forfeiting the rest of those DRCs. He's forfeiting those. But he needs the money. He says he's going to die. Or his wife passed away, and he thought, well, what the heck? I don't have her to leave it to. I'll just take it. So you can file, suspend, and then unsuspend and get a lump sum. That's the point I'm making. Another strategy that can be employed if you file and suspend. Yeah.
Greedy. Okay, he gets $48,000 if he revokes a suspension.
Right.
What happens? The 8% per year. He loses that too?
Yeah, he's going to lose that. But he gets that lump sum. Yeah, he does. You're right, Rich. You have 1 year from the time you file and suspend, or not that, you have 1 year from the time you file for a benefit. 1 year from the time you file for your benefit to say, whoops, I made a mistake. I don't want my benefits. Let's say you come into an inheritance or whatever reason. You get a job that pays you really good. You think, man, I shouldn't have started my Social Security benefit. It used to be, this is the wisdom of our government or the stupidity of our government, whichever one you want to choose. It used to be that you could start your benefit at 62. Take it for 4 years. Make $2,000 a month for $24,000, $96,000 you've collected without any COLA. And say to the government, hey, I would like to pay this back. You know how much interest the government charges you for that $96,000? None. You got an interest-free loan for $96,000 to go buy the boat of your choosing, your dreams. So you pay the $96,000 back. It wipes the slate clean. You wait to 70 to start your benefit, and you get all that 32% plus more. The government said, wait a minute. We're giving people an interest-free loan. They wised up. They've changed the law. Now you got 1 year from the time you start to pay it back and start over. Only 1 year. Okay? Does that make sense? Maybe the law doesn't, but that's what they do. All right, let's suppose why you might do this. Income may not be needed now. It's creating an unnecessary tax for you. You can pay it back. You can then suspend. You can file and suspend. You can use a different strategy, but there are different reasons why people decide to pay it back. But many do. I'm meeting with a client tomorrow who called me and said, hey, I started my benefit at 63, and I'm getting $2,000 a month, but I just got a job paying me $60,000. I didn't know I was going to have it. What can I do? I said, you only started your benefit 3 months ago, so you've collected $6,000. You could pay it back. That wipes the slate clean, and then you're making $60,000 more a year. You're going to wipe out one of those earlier years of low earnings. It's going to ultimately raise your Social Security benefit. Claim it later. He said, that's what I'm going to do. So there are reasons why you might employ this strategy. All right, here's another example. John files for his benefit at 63. It would be $2,000. His benefits reduced to $1,600. At full retirement age, it would be $2,000. You take it early, it's reduced. So he says, I'm going to take $1,600. 6 months later, he comes into inheritance. He doesn't need the Social Security check. He withdraws his claim. He repays it. There's an example. He repays $9,600. He can claim later and get a greater amount. I'm going to skip that one. All right, let's talk about benefits and divorce. You can generally claim the higher of your own worker's benefit or up to 50% of your former spouse, your ex, because you're divorced, even if your ex is remarried. Okay? Unless you are at full retirement age, you cannot choose and you have to take the higher benefit. But if you're at full retirement age, you can make the choice. You must be 62 years old or older to get a divorce spousal benefit, and your ex must have filed. You know, you can't get a spousal until your ex is filed. Let me tell you what happened, though. That's the general law. But what happened was, in some of these bitter divorces, let's just put the man as a bad guy. He generally is. The man says, I don't want my ex to file for a spousal, so I ain't going to file. And he says, I'll wait till I'm 70, and that'll mess her up. That's cruel. You know, that's cruel. Well, Social Security and the government thought so, too. So they then added, if your ex is 62 or older and you've been divorced for 2 years, you can claim a spousal off his even though he hasn't filed. So they give, remember I told you there was an exception to this spousal rule where the guy had to file? This is the exception. Social Security recognized that some of these men were being really jerks and not filing, which would stop their ex from filing for a spousal. So they changed that. Your marriage must have lasted 10 years in order to claim a divorce spousal benefit. And if you're younger than your full retirement age, your worker's benefit has to be less than 50% of your divorced ex-spouse. Okay? I'm going to give you some examples. Tom and Lisa are divorced at age 45. Tom has since remarried, but Lisa has not. At age 62, Lisa files for a divorce spousal off Tom's record. Tom, at 66, would get $2,600. All right, they've been divorced for 10 years. She hasn't claimed any other benefit. All right, if Lisa were 66, which is her full retirement age, how much would she get off Tom? $1,300, 50%, exactly. But since Lisa's 62, if she files for that spousal benefit, remember, anytime you take your benefit before full retirement age, it gets reduced. So she's 62, I won't bore you with the math, she would get, instead of $1,300, about $910. So she's taken a cut, but she needs the money. So there's an example of a divorced spousal. Betty is divorced, here's another example, and wants to remarry. Will her remarriage wipe out any spousal benefits she could claim off her first husband? Yes. Yes, it will. Yes, it will. So, if your first husband had a great job and you knew he was getting a great Social Security benefit, and you were in love with another guy who happened to have a bad job and wasn't getting a good benefit, I hate to say it, don't marry him. You might want to live in sin for a while, I don't know. But, you know, the other thing is they're very strict about that rule. The same, let's say you've been divorced for 9 years, or you want to get divorced, and you've been married 9 years and 11 months. God, put up with the guy for another month. Put up with him for another month to get to that 10 years so you can claim the spousal. You can't claim the spousal unless you've been divorced 10 years. Okay. Married. I'm sorry, married 10 years, yeah. All right, Betty is divorced and wants to remarry. Will her remarriage wipe out any survivor benefits she can claim on her ex-husband? She's divorced. She wants to remarry. All right, 10 years, they've been, divorced, so that rule is out the window. And let's say her remarriage occurs before she is 60. There's the rub right there. If she remarries before 60 and her ex dies, she has no claim to any of his benefits. If she remarries after 60 and her ex dies, even though she might be married to her new husband, she could claim a widow benefit off the first husband because she got married after 60. Again, Social Security was smart because what was happening was somebody, has this husband die. The wife is in love with somebody else now. There used to be not this age 60. If you remarried, you lost everything. So what was happening was this new couple was living in sin. They weren't remarrying because they wanted to claim the divorce benefit off the first husband. So Social Security, again, wised up and put the age 60 as now, if you remarry after 60, you still could claim off your first spouse.
I got a question, Rich. Can she also claim spousal benefits on her new husband?
Yes, she could decide, but I'm going to give you an example in a minute, Richard. You're thinking ahead of me here. All right. Now, you must be married 9 months in order to claim a widow benefit or survivor benefit, unless there's been a tragedy. Social Security defines that. You must be married 1 year to claim a spousal benefit, and you must be married 10 years to claim a spousal divorce benefit. I'm just trying to summarize the numbers here. Don is 69 years old. Catch this example. He's been married 3 times. Each marriage lasted 10 years. Each marriage lasted 10 years. His 3 wives are Mary, 68, Sue, 66, and Lee, 60. Those are the ages of his 3 wives currently. Who can file for divorced spousal benefits? Which of those 3? No. Mary. Who can't? Lee, because she's not 62. She's only 60. But the other 2 can. Everybody can eventually, but not just yet because she's not 62. The other 2 can, but when Lee turned 62, she could. So all 3 divorced wives can claim off Don. Don won't even know it. It doesn't change his benefit, whatever he's getting. He won't even know it. Will Don's benefit be affected? No. Will he know who is filed? No. Social Security won't tell him. So he doesn't even know. Benefits, widow benefits could start as early as 60. We were talking about divorce benefits there. We went over that. We'll just skip that. It's in your notes. Here's another strategy. Paul is 66. This will answer yours, Rich. Paul is 66. He's still working. This is a true case, by the way. I met with this guy. Unfortunately, he lost his wife, Ann. She died in a boating accident. Ann's benefit would have been $900. That's her worker's benefit because she hadn't started her Social Security when she died. Paul is considering marrying Sue. All right, he lost his wife, and now he's in love with another lady and wants to marry Sue. Sue has been a lawyer all her life, and her benefit is $2,237 a month. All right, so keep that in mind. What are Paul's options? So you get the picture. Paul lost his wife, who was entitled to a $900 a month benefit. He wants to marry Sue, who's entitled to a $2,300 a month benefit. All right? He can begin his own benefit. His own benefit is $2,400. So he's got all these things in his mind. You know, the earnings test won't apply because he's at full retirement age. He can claim a widow benefit from his first wife, $900 a month. All right? What's he letting his benefit do? Grow those 32%. He can do that. Or he claims a widow benefit off Ann, get $900. 1 year after he marries Sue, he can say, I don't want that $900 off my first wife who died. I want a spousal of Sue. A spousal benefit is what percentage? 50. Take 50% of the $2,200 or $2,300 that his new wife is making. He goes from $900 a month to $1,100. He says, heck with my deceased first wife. You know, I'll take the spousal benefit off my new wife. And then when I turn 70, I'll go from the new wife's spousal to my own benefit, which will be about three grand or more than that. This was actually a true case, you know. So you see what I'm saying? This guy, and what was really funny about the whole meeting, he told me about his first wife dying, and I explained the option. He could start with a widower benefit and then go to his own worker's benefit. And as we were leaving, he said, oh, one other thing. I'm in love with this other girl, and I'm going to get married. And so I said, well, that gives you another option. And, you know, he walked away happy, to be honest with you, but that's, you know. So I suggest you all do this if you haven't started your Social Security benefit yet. I suggest that you contact Social Security through the email on the website and apply for your own statement. Social Security stopped sending out statements, but last year they're starting up again sending statements every 5th year. So when you're 45, 50, 55, 60, you'll get a statement now in the mail every 5th year. All right, if you're already on benefits, you won't get one. But I'm advising anybody I see to go online and get your statements. You can get it anytime up to date if you go online and establish an account. www.ssa.gov, or look at the last page of your handout, and it kind of gives you all the particulars as to how to do it. Because deciding how and when to begin your benefits can be a very complex thing, and it depends on your own financial situation as to when to start. There is no hard and fast rule. Steve and I, you know, we talk to groups like this. We just had one at Ameren UE and had 70 people there. We had one on Medicare for 100. I've actually met with, another story, four teachers. They were teachers from the same school district, said, Rich, would you come and talk to us privately about Social Security? And we'll have 4 teachers there. You won't have to see each one individually. I said, yeah, I can do that. Well, I got there, and they had a jar of margaritas about this high, but it was this much was left. And to be honest with you, we didn't get much accomplished. But my point is that Steve and I are willing to meet with large groups, small groups, even individually. There's no charge for our services. We get paid by the foundation. And the foundation's goal is to educate people about how to get control of their money, how to get more control of your money. So my card at least, is in the packet. Common mistakes, just by way of review. Not working a full 35 years. Now, I realize some of you can't. You just can't stand your job. You can't stand the people you're working with. But if you can make 35 years, you don't get those zeros in the calculation. Electing to start your benefits as soon as possible without thinking of other options. I'm not saying you shouldn't start it at 62 or 63 or 64. But think of the other options and look at your financial situation and get some advice on that. Forgetting about the perks that are available at full retirement age. I tried to emphasize that during full retirement age, you get a lot of special deals, a lot of special opportunities to do some things. And failing to coordinate with your spouse. We have found that when we do analysis of Social Security options, a couple that uses the spousal benefit somehow in their strategy ends up with more lifetime money than a couple that doesn't use the spousal benefit. Because again, you can use the spousal and let your own benefit grow. You can use the spousal and let the spouse's benefit change. There's a lot of things you can do at that particular point. Forgetting to factor in survivor benefits. I had a guy come to me and I explained all his options. And he said, you mean if I wait till 70, instead of getting $2,000 a month, I might get $3,000? And if I happen to die at 71, if I'm getting $2,000 a month, that's what my wife will get? But if I'm getting $3,000 a month, that's what she'll get? I said, yeah. She's going to get where you're at when you die, that amount. And he said, you know, I really love my wife, and I'm going to wait as long as I can so that she can get the highest benefit available to me. You know, that's this guy's view of it. So there are different reasons why people take their benefit. Not understanding that earnings test, I tried to show you if you're not making $50,000, $60,000 over that earnings test, you could take your Social Security, and even though that $15,720 is the limit, you don't get it all wiped out. You know, if you're making $25,000 or $30,000. So it might behoove you to start your benefit then. Not registering with the Social Security Administration online. I think you all ought to do that, really. It takes 15 minutes. It's a secure website. You can go anytime in and see your up-to-date statement. It's really good. And that'll give you a lot of satisfaction. And then not having a comprehensive tax-effective income plan, because you've got to use Social Security and think in terms of taxes, your total income. Had a guy yesterday say, you know what I'm going to do? I'm going to take mine later and I'm going to pare down my IRAs and I'm going to use my IRA money and my 401k money to bridge that gap between now when I retire and when I start Social Security. He said, because my Social Security will grow. And he said also, my IRA and my 401k money is taxable. And if I have to wait till 70 and a half, which those of us who are 70 and a half know we have to take that money out because the government wants its taxes, I asked this guy, I said, where do you think taxes will be in 6 years when you turn 70? He goes, I said, I'll give you a multiple choice. Up, down, or the same? What would you say? Yeah, that's what he said. He said, well, heck, I might as well start taking that money out now and pay taxes when they're lower, and then I'll wait on my Social Security. My point is, everybody has different reasons for their Social Security when they're going to take it. And I don't think there's a wrong answer, but some answers may be better for you. So, now, any questions you have? How are we doing on time, Steve? Good? Yeah, sir.
How do you keep track of your ex?
Of my what? My ex?
Yeah, when you're talking about an ex, and you know, it could be 10 years after the fact and tracking down what they have coming to them because it could be long gone.
Well, all right, here's what Social Security won't do. If you go in and want to apply for a divorce benefit, let's say, all right, you have to bring with you your marriage license and your divorce papers. If you know your ex's Social Security number, that helps. But it's not mandatory. They can figure it out from the name. Social Security will tell you if you file for a benefit off your ex, what it will be. They will not show you his statement. They will not show you her statement or his statement. But they will tell you what it is. They have to do that. And then they will tell you, hey, if you're under 65 and your ex's spousal benefit is not as high as your own benefit, you can't claim it because of deemed filing. You got to take yours. But if your ex's benefit, 50% of his, is greater than yours, then you can get it. And if you're after 66, you got a choice. And the other, oh, here's another one. Just by way, we'll cover this when we get to Medicare. But I'm going to Social Security office with this divorced lady. She was married to a guy that was making a fortune. All right, they filed jointly 2 years ago, and their income was over $400,000, okay? She's on Medicare. Medicare Part B, for those of us on Medicare, we know what Part B is. There's a charge for Part B based on your income. By filing jointly, $400,000, both him and her would have to pay almost $350 a month for Part B. But they got divorced a year ago. So she went from filing jointly to now filing as an individual. And her income, because he had most of the income under him, went to $90,000. So we're going to Social Security, and I'm going to go with her because, she's scared. She wants a male to go with her. I'm going with her. We're taking her marriage license, her divorce papers, her 2013 tax return, which shows they were filing jointly. We're also going to take her 2014, where she filed. What we're trying to do is getting Social Security to say, instead of paying $400 a month for Part B, you should only be paying $140 because there's a different threshold. And there was a life-changing event that caused you to have this right to have a lower payment, that being the divorce. So we'll talk more about that when we talk about Medicare. Anything else? Yes, Charlene? Do you have to pay Social Security? Social Security is what I call tax advantage, which means it's not tax-free. You pay on your Social Security benefit, whatever it is, most people have to pay taxes on 85% of that benefit. So if your benefit is $10,000, you pay taxes on $8,500. Now, there are ways, if you've got a good tax person, and I don't say to cheat, but there are ways, if you could keep your income as a couple under, I think the threshold is 44? Yeah. 44,000, then you'd only have to pay Social Security on 50% of your Social Security benefit. If you could keep it under 25,000, you pay zero.
Single, yeah.
Yeah. So there are ways, but in general, for most people that have an income of over 44,000, you won't pay taxes on 100% of your Social Security, but on 85. So it is tax advantage, I call it, not tax-free or tax-deferred. Okay? Steve and I will stick around afterwards. Time-wise, what is it?
You're good.
Good shape. Okay. I